Today on the Dear Claire series, I'll be talking about Veterans Administration loans. It's called a VA loan, and typically it is, of course, only for people who have served in the military, a veteran. And the reason why we're bringing it up today and what's so important about it is it typically gives you a great interest rate. You can put very little down, almost, well, next to nothing down. And there's no mortgage insurance. So typically on a conventional loan, if you were to go out and just get a normal old everyday loan, you would be getting a conventional loan. There are limits on how much your loan can be, what the total amount of money it can be. So your loan limits in Portland, Oregon for a conventional loan are around $510,000. Normally, back in the day, VA loans abided by those same loan limits. What I've found out recently is that in January, the VA decided to lift those loan limits. So based on a mathematical calculation about your entitlement, which is complicated and is going to be, it's going to be dependent on the person and what their service was, you might actually be able to get a loan for significantly more than that if you want to, and have a VA loan with no mortgage insurance, and have a fantastic interest rate, which is really hard to do right now. That was of January 1st, and they have not made any end date on this program. So for right now, you could get a zero down loan that's guaranteed by the Veterans Administration with no mortgage insurance. So let me explain mortgage insurance. If you're putting less than 20% down on a purchase, then you're required to have mortgage insurance because it insures the lender if something should happen and you don't make your payments, they will be reimbursed through mortgage insurance. In this case, for a veterans loan, the Veterans Administration is actually standing in as your mortgage insurance, and that's why you can put as little as zero down and still get a fantastic rate and a loan with technically no mortgage insurance on it. There is a complicated mathematical equation to figure out exactly what what you would actually qualify for, and of course you're going to have to qualify on income and assets and all the typical things that you'd have to qualify for on any loan, but it lowers the bar significantly because you could put almost nothing down and own a home, own your own home. Of course you have to live there. This can't be on an investment property unless you're living in one side and renting out the other. You can do that. And it has to be in good shape. So you can't have a house that needs a lot of work because they want it to be in good shape for you to live in. Of course, if you have any other questions that you'd like me to talk about, please comment below or just message me. I would be happy to address it. And of course, remember to subscribe to our Paris Group Realty YouTube channel to access all kinds of additional information that we have posted there. I hope you have a wonderful week, and I will see you all soon. You take care.